Test test 1 2 1 2. What's going on, guys? It's Ricky with TechBud Solutions. Hope that you guys are all having an amazing Tuesday. Today's May 13th, 5:28 in the morning, and we are waiting for today's CPI data report to be released. So, as you could see, the market entered this random uptrend, higher highs, higher lows, all during the pre-market session, when the entire extended hour session yesterday, we were showing signs of lower highs and lower lows. It looks like it found a support right around 504.92. Again, we should be able to see the report come out in the next 1 minute, and then we'll see how the market reacts. So hopefully I earn your thumbs up. Maybe you can consider subscribing, and then I can break down the report. I'd be more than happy to break it down so you guys have an understanding of what exactly was just released. So for those that do not know, yes, today is the CPI data report. We have an expectation of 2.4% for CPI and overall core CPI at 2.8%. Both are expected to increase by 0.3% before seasonal adjustments. So let's go ahead and wait to see in the next 20 seconds what is going to happen. Yeah, I couldn't set my alarm because sometimes my daughter runs into our room and the alarm would wake all of us up. But dude, I'll talk about it in a little bit. 3 seconds. Here we go. Market's still pushing up for no reason. What in the world? There you go. Come on. Absolutely insane. Markets are still trying to push higher. Let's see what the report is. Oh, wait. We came in lower. 2.3% and core CPI came in at 2.8%. That is good. So it looks like we saw a 0.2% increase on core CPI and a 0.2% increase on overall CPI. Here it goes, still testing. See if it gets those higher highs. Normally we see a little bit more of a reaction than just this. NASDAQ market is up 0.34%, 0.35. We're not really seeing much progress. Cancel the pullback? I don't know. It's lacking progress, so let's go ahead and let's give it a little bit more time. So let me refresh this. First off, I'm going to break it down very quickly. So for those that are watching for the first time, I want you to understand, where to access this report and how you can do it on your own, right? All right. So first off, it's a CPI data report, Consumer Price Index report. That's our inflation report. The website is bls.gov/CPI. So you refresh it. Once you refresh it, you can click on PDF, and then it shows, you see how this one did not update, right? So April 10th, 2025, that's not today. Let's refresh it. There he goes. May 13th, 2025. This is it. So this is what we added, a 0.2% increase. And remember, we talked about it yesterday. This is what we took away, a 0.3% decrease. So it's not just the sum. The way that they calculate CPI is not just the sum of all last 12 months. There's an actual formula behind it, but it's a rough, you can pretty much get like a general understanding of what the CPI, what the inflation rate is with the general sum. So we add 0.2%, we remove 0.3%. So as you can see, the expectation was a 0.3% increase. So we came in at 0.2 for overall CPI. So it actually only increased, supposedly, inflation by 0.2% on the month of April. And we take away April of 2024 from the formula. So this is the part that I've been sharing, that for next month and the month after, expect inflation to rise, because last year we had 2 flat months for May and June where nothing was added. So that's why if anything gets added in this year's May and June, then again, it would cause our inflation rate to go up. That's the whole reason behind that. So just wanted you to understand. And then this is just like a what's it called? A dotted graph where it shows you where all items, which is overall CPI, coming in at, we were at 2.4, now we're at 2.3, makes sense. And then core CPI, we were at 2.8, and we're still at 2.8. Very simple to read, right? When we look at the actual line items, let me pull it up here. So is CPI above or below expectation? It's below expectation. So it came in at 2.3% when the expectation was 2.4%. So it came in lower than what was expected for overall CPI. But remember, a big focus for the Federal Reserve is core CPI, because core CPI is all items less food and energy. And that's really the focus, because that's really what they could impact. So it's still at 2.8%. You'll hear them talk about that. NASDAQ market is not showing any signs of progress so far. Since the report came out, it's peaking. So we'll see if it continues. But do you guys want me to break down the list of what went up, what went down? Because this is how we got the 0.2% increase. Is that cool? So is this good or bad? Inflation going down is supporting the case that things are supposedly less expensive. Core CPI, it's good news. There's no reason to overcomplicate it. For overall CPI, going from 2.4% to 2.3%, it's good news. Because inflation is going down, is the Federal Reserve expected to cut interest rates more aggressively? Probably not. So this is why you're still seeing a 93% probability, according to the Fed Rate Monitor tool, that the Federal Reserve is still very unlikely to cut interest rates. So, all right, if you guys want me to break this thing down, just give the video a thumbs up, and that's all I literally ask for. Just smash that like button, make sure you're subscribed to the channel, and let's go ahead and jump right into it. So, I'm blocking it. Can you guys see this okay? All right. So this is the, when they talk about inflation going up or down, these are the items that they are tracking inflation on. For the Consumer Price Index report, they are tracking for food, food at home, food away from home, energy commodities, gasoline, fuel oil, and then the list goes on. Then this is all items less food and energy. This is the section that the Federal Reserve really focuses on, because if they raise or they cut interest rates, these are the areas where they can most likely impact, U.S. consumers, versus this general area. If they raise or lower interest rates, these are more of like necessities, food and energy, right? Things that Americans are going to need regardless. But these are more of like commodities that aren't as necessary. I don't want to say shelter's not as necessary, but just as in apparels, new vehicles, used vehicles, stuff like that. So let's go ahead and just jump right into it. So as we saw for the month of April, overall CPI saw a 0.2% increase. How did it only increase by 0.2% with all of this? Well, it's because some items supposedly dropped in the month of April. So it shows that food saw a 0.1% decrease. You see that? And it says food at home saw a 0.4% decrease, saying that food that is purchased for home saw a 0.4% decrease based off of price. So where is this? Yeah, and then food away from home saw a 0.4% increase based off of the previous month. And then we have energy. Energy is normally one of the most impacted sections of inflation, but that's why they try to remove it on core CPI. So, so 0.7% increase overall. We saw a 0.2% decrease. Sometimes I get confused. Yeah, energy commodities saw a 0.2% decrease. Gasoline saw a 0.1% decrease. And then negative 1.3 we saw for fuel oil. Just making sure that, wish I had a little stencil. Let me double check this. This just makes it easier. Let's just go down the list, okay? Energy commodities, gasoline, all types, negative 0.1% increase. Fuel oil, we saw a negative, right? It's right on over here, negative 1.3% decrease. Energy services, a 1.5% increase. Electricity, a 0.8% increase. Utility piped gas services, that saw the biggest jump of a 3.7% increase. And then all items less food and energy. So that's it for the energy sector. So taking all of this, it looks like utility, gas pipe services, and energy services were the two biggest jumps. Everything else saw a slight drop. All items less food and energy, commodities less food and energy, all items less food and energy saw a 0.1% increase. New vehicles saw no increase or no change, as you can see right on over here. If we look at used cars and trucks, we saw a 0.5% decrease. This is the one that I find to be interesting for new cars and used cars. This is where you see prices either going up or down, so I find that to be pretty useful. For apparel, a negative 0.2% decrease. Medical care services, 0.4% increase. Energies less services less energy services, a 0.3% increase. So shelter, 0.3% increase. Transportation services, 0.1% increase. Medical care services, 0.5% increase. So the biggest increase that we saw for the month of April, right? If someone were to ask you, not that anyone would, so would be the biggest increase would be utility gas pipe services. So a 3.7% increase under the energy sector. What saw the biggest decrease? It looks like it was also in the energy sector, and it was fuel oil. So fuel oil saw the biggest decrease, and that's a 1.3% decrease. So fuel oil, biggest drop. Utility gas pipe services, biggest increase. And that's really just it. I mean, you can read this report. It just repeats the same thing over and over again in the way in the wording, and it confuses people. But all this is saying is that overall CPI increased by 0.2% on seasonal adjustment in April. So for the month of April of 2025, we saw a 0.2% increase after falling 0.1% last month in March. And that all that is saying is that in March, we dropped 0.1%. In April, we increased 0.2%. Very simple, right? Common sense. So I want you to understand the way that this thing is stated. So overall, the last 12 months, all indexes increased 2.3%. So that's how, with the sum and the exact formula, again, we went from 2.4 to 2.3%. Make sense? So that's that first section. And then the index of shelter rose 0.3%. And then it just gets into the specifics. So all items less food and energy, this is core CPI, rose 0.2% in April, following a 0.1% in March. So again, now this is just talking about core CPI, where again, the increase that we saw was a 0.2%, but then the decrease in March was a 0.1%, but we still ended at the same amount of 2.8%. So it says where is it at? Yeah. It says all items less food and energy rose 2.8%, which again, all items less food and energy is core CPI. So over the last 12 months. And that's really just it. So I feel like they make it more complicated than it needs to be. It's super simple, right? This is the increase that we saw, or the change that we saw for the new month, and we just removed the old month. And then there's core CPI, or core CPI and overall CPI. And then these are the line items. So every month, right? So next month, May is going to be added here. And then it's just going to be tracking these items. Did the price go up or down? Okay. Food, up. food at home, down, down, and just stuff like that. And it just goes down the list. Very simple setup, very simple report to actually read. And I hope you have a little bit of a better understanding on how to do it. So is this report good? This report is not bad, right? This CPI data report that was just released, it's great for consumers. It's showing that inflation is going down. Now, a lot of people don't believe that inflation is going down because overall inflation, right, the way that it's tracked, if you guys just saw, is based off of the last 12 months. And this is what pisses people off, is that they changed the way that they calculate the inflation rate. At least they made an adjustment, I think last year or 2 years ago, because if you actually look at any of those items and you look in the past 4 or 5 years, you would see that inflation is up like 20 to 40% on almost all those items. That food at home, food away from, like, we all know that from what we paid 4 or 5 years ago, what we pay for food is significantly more expensive now than what it was. So don't get that confused. And it doesn't matter what president it's under. It's not a Republican thing. It's not a Democrat thing. It's just the way that they choose to calculate the inflation report. That's all. Because then they use that inflation report to be able to determine, are we going to be raising or cutting interest rates based off of the last 12 months for the Federal Reserve. So, and then that's why you have people state that, hey, the Federal Reserve had a goal of a 2% target. We're close enough to 2%. We can start cutting interest rates. But again, the Federal Reserve stated that if economic data does not support that the economy is slowing down, then we don't see there to be a reason to start cutting interest rates, which is, I think, why so many people are getting pissed off, because these inflation reports are coming out fair or good, yet it doesn't feel like it, right? For most Americans. Right now, it's cheaper to rent a house than it is to buy a house. For most Americans, it's pretty expensive to go out to eat as a family of 4, right? Or go grocery shopping versus what it was 4 to 5 years ago, and then 10 years before that. But that's just the world that we live in now. Everything is just incredibly more expensive. I'd encourage you to look at even in just the past 4 to 5 years. And the reason I'm saying 4 to 5 years is I don't want you to think it's like a political thing, because it's not. When it comes down to the inflation report, it's really just dependent on how it's tracked. And that's the part that's my biggest issue is I don't think it's very realistic because they only take the last 12 months into consideration, where you and I are comparing prices to what we paid a few years ago, because that's the impact that we feel. It's not just the last 12 months that we feel the impact on. So, that's pretty much it. So, why don't you short the market? I might short Tesla at these overbought levels. So if we look at Tesla with how overbought it is, it's up about 0.88%. It's not up very much that it would even be worth it. I think that's the biggest thing. And there's no break of pattern. It offers 2% downside, even if I do short this with $250,000. It'd be a nice chunk of change, but it wouldn't be anything substantial. And it's still in a ascending uptrend pattern, so I have to respect that. It's bullish. The trend is your friend. Let this thing run up as much as it needs to. And we'll see how the markets trade at market open, right? We often see that, markets can be looking bullish or bearish during that pre-market session and then ultimately end up changing direction right when they open. So excited to see what happens. Oh, I forgot who you were. Market is. Oh, this is the part, again, I don't know if you guys remember, this is the Spy Warrior guy. My offer still stands. If you want to buy Tesla at these levels, so you buy Tesla with every dollar that you can afford, upload a video, show yourself buying however many shares you can afford, brother. I will open the same amount in a short position. I'm all for it. Let's do it. I don't know how much you could afford. Could you afford 1 share? Could you afford 2,000 shares? I'm open to it. Let's do it. Again, and all you do are excuses. Again, what? That's crazy. Imagine hating on someone's YouTube page, what was it, days ago? But you still wake up 1 hour before the market opens and you tune in. That is a good boy. Good job, Spy Warrior. Good boy. Good boy. I'm happy to see it. I have 107 shares. That's good that you have 107. I'm saying buy it at these levels, right? Because if you're an investor in Tesla and you got it at $200, $100 per share, even $250, right? Very different. What I'm saying now is that I don't think Tesla's a good price now. So again, if you want to buy it now and you want to hold it, I'll open up my short and we'll do the same. 100 shares, 500 shares, 1,000 shares, 2,000 shares, whatever it is. All right. All right. That's funny. And yet you're still here, brother. You're still here. You're still a good boy. Can we give a round of applause to Spy? He woke up on time. He tuned in to my live session. I love that. I love that. Good boy. Good boy. We'll see you tomorrow, buddy. I guess we'll see you into today's later video. Why does he keep coming back to watch you? Again, he's just a good boy. He knows that daddy's live and he wants to make sure that he gets my attention. So I'm here to give it to him. It's a good boy. Yeah, it's love. I like it. I like it. Good boy. There we go. So market's going to open in the next 40 minutes. The biggest thing that I would encourage you to do is, as of right now, markets are still looking to be bullish. The inflation report came out lower than what was expected, and that's normally good news. Markets are so chaotic right now. Again, we've seen it before where markets are bullish during pre-market sessions, and then they might ultimately end up changing direction right when they open. So stay patient, stay calculated. If the trend still looks bullish once the market opens, then just go with the flow of things. There's no reason to overcomplicate it. But if you begin to see a lack of progress, a potential change of direction, then just make sure that you're proactive about it, right? So we'll talk about it a little bit more in today's live trading session. I hope to see you there. And if you want to tune on in, it's the second link in the description down below. If you sign up right now, you'll be able to watch me trade live in the next 40 minutes, but you have to be quick. So second link in the description down below. We'll get you a discount for LPP and we'll see you for that live session. So I appreciate your time. Thank you guys again for tuning on into the CPI data report. Spy Boy Warrior, thank you for being such a good boy, waking up early and showing up to get my attention in these live streams. And like I said, whatever you could afford, I'll match your short, Spy Boy Warrior. Like always, let's make sure that we end the year on a green note. Take care, team.